Hello traders, and welcome to another edition of Gold Weekly Review on what the chart says. What we intend to do here is to review what happened to gold last trading week. We review the week, the daily chart, and also the monthly. Before we go further, let's quickly show a disclaimer. This video or presentation, as you may call it, is for educational purpose and not to be used as trading advice. If you want to trade, consult your investment advisor for further advice. All the data we want to show here doesn't guarantee future result, because past performance does not guarantee future results. They are only simulated performance. We're looking at after effect. Okay, so by viewing our videos or presentation, you acknowledge and accept that all trading decisions are your own responsibility. Thank you. Let's go further. See the agenda for today. We look at gold sentiments. Before going to the chart, let's say the gold sentiment, we look at what the commercials are doing. These are the sentiments I normally look at to trade for long term or medium term. We look at commercial activities, gold optimism and pessimism. What's the level of gold in terms of optimism or pessimism? Then we look at the risk level. The first two are long term. Long term, where the last one, the risk level, is medium, short to medium term. Okay, then after that we go to our chart straight off. Let's see the commercial hedges. The chart here, the black line is the gold trend, the gold price, and the blue line here below it is the activities of the commercial. Generally, we have three active people: the commercial, the speculator, large speculator, and the small speculator, like you and me. We are small speculator. The large speculator, they are trend followers, and the both commercial and the large speculator dictate the direction of commodities, currency, stocks, and all the rest. For gold, the edges, while the price is going down, they are buying, and when it's rising, they are selling to the retailers or the large speculators, as the case may be. See what happened here. So where it's more important, really, let me see if I can get a pencil. Yeah, pen. More importantly is this level, the green dotted line and the red dotted line. If the activities of the commercials are within this level, it shows possibility of reversal can take place. So their confidence level is at this level. We should expect gold to fall, or the green, and at the red we should expect gold to rise, or any commodity. Not always the case, but you need to, that's just for information purpose. It gives you an idea of what you're looking at. See what happens here. When the activities of the commercial are at extreme level, you can see gold price started to rise again, and at this level you can see, if you correspond it to gold price, that's when it's started declining. Okay, so but for now you can see the activities, we are not at either of the extreme, but they are net short. They are reducing their net short, that's they are buying Oh, sorry, they are selling to you and me, the trend followers, and the large commercial, large speculators. They are selling to them for now. Okay, these are the smart monies, so that's why I love to see what they are doing, to see what they are really doing. So smart monies, they are selling. So we anything can happen. It can reverse or it continues down. That's the risk level within all these intervals. All this interval below the above the red or below the green line. So anything can happen within here. So but for now, what we see in the market is let me clean up this one. What they see now is they are reducing their net long. So the gold is rising regarding that. Okay, let's see other sentiments. Gold optimism and pessimism. Optimism, what this indicates is if gold is at this optimism level, so people are they are on high to buy gold, and this is pessimism level. So when it is at this red dotted line, so that's when we should be thinking of selling gold. Uh, while it is on the green, that is when you should be ready to buy. However, you can see throughout almost this is May 2019 to date, gold hardly hasn't even come to the to this level, to the green. It just stopped midway at 50. So this 75 is 30 level. 30 level. Okay, so what we see now is gold is at 75. So optimism is high for a long time. It's high, so you can stay there for long. You can stay there for long, but that's the risk level. You can see what happened here. Gold was up to optimism, very high, and the price stays there for some time, then falls, rally again, then falls. So what we should be doing really on long term is since gold is on long term is rising, to see to enter the market when it falls to below 60, to buy when gold is below 60, and try to sell with care when it's tending to 80 thereabout. Okay, but for now gold is at 75, so it can continue to rise as we saw here. But what happens here and what happens here? But that will take a while for gold to react. This a long-term outlook, so that's why it's good. Let's clean it up. So let's go to the last sentiment, which is a medium term. Oops, sorry for that. Let me come back to this slide. I think I'm showing different. Okay, yeah, good. Okay, so this is the last one, the medium term sentiments. Let me quickly explain what this also means. The risk level. So anytime it's above the red dotted line, so you should expect to go to decline. And anytime it's below the green dotted line, gold should rise. Okay, now for now the risk level it's at almost at medium, more than medium, middle line, but we're expecting it to rise to 8. So when it's about 8, then you should expect gold to quickly decline or stay there, just like what's happened here. for some time here, but it didn't stay for long here. It didn't stay for long here. Uh, it could also get to maybe around 7 and stay there for long. So, but for now it's at 6 and it's staying there. So that is why in my recent post I indicated that gold still have potential. I'll show that later. Okay, that's all the sentiment I'm looking at. All the sentiment are showing positive for gold, and that is what we have both for long term and medium term. Now let's go to the chart immediately. Let's see what the chart is saying and try to interpret if you can see opportunities in the market. Okay, this is a gold chart, daily chart, and we recently saw a correction of gold, the daily chart, and it rose above that and it's making new highs. Now, on the weekly, let's start from the monthly actually. Let me remove all the lines. Okay, on the monthly, gold has been very bullish. It's only paused in February and March, and from April, May, and June it's been trending up. So it's now close to, it's already, so it's close to the high, the swing high here in 2012, in August 2012. This is, yeah, it's September 2012, September, October 2012. So yeah, it looks interesting because look at September 2012. Immediately it made this bullish move. The next move was bearish. So for June, it's not going badly. June generally is a bearish month for gold, and interestingly, it's ending bullish this year. I'll go to some other indicator to show you the effect of that. Yeah, in terms of seasonality, gold is bearish in June, but for this year, it's ending bullish. So if you go to this stock charts, 20 years. Let me start from 20 years. This is June. This is June. June, 45% gold is likely to end positive. So 55% is more to be bearish. And say the returns. The returns is minus 0.2, one of the lowest. This is minus, in March is 0.3. Let's see the March this year. Yeah, see March, it's a bit, it's indecision, it's ended negative. April negative. April is supposed to be bullish, but the returns is low. It's 65%. Yeah, for June supposed to be 45%, and it's ended positive now with returns. Now July, from July to August, technically seasonality, in terms of seasonality, it's supposed to be bullish. Well, this is a bit low. August, yeah, that's definitely supposed to be bullish. So I'm just thinking ahead what can possibly happen. But in terms of the bullish candle, it's, in terms of the candlestick, it's not looking bad. It's not looking bad for June, and there's high possibility it's going to pass this high, this swinger in October 2012. That's at 1796. 1796 might be violated. So there's opportunity in the market for gold, and so we'll be targeting this level indirectly, or this high, which is 1900, above 1900. Okay, so let's go to the weekly. Yeah, weekly we saw gold. Let me remove this. We saw gold valuating the swinger here made in May this year. That's at 1760.65 thereabout. Uh, so that's a positive one. But as we saw from the sentiments, the optimism is high, so it might pull back to test this support, or this week here might pull back to test it. So in general, it's positive on the weekly, monthly, not bad. The daily, let's see, daily charts. This is what the support level. That's the support level, and it just touched it. It touched it on Friday. It touched it on Friday. So will it test it again on Monday? I'm not sure. I'm not sure. I'm not sure. It's moving up. It's moving up. I think this is where I might test on Monday. It depends on how the market opens. If it opens above, it gap up. If it gap up, might retest the to fill up the gap. So it depends. Let's wait for market to open later today. So in all, gold is very bullish. Is very bullish based on the sentiments, the activities of the commercials, and the price itself, as we saw. Ladies and gentlemen, we've come to the conclusion of the weekly analysis for gold. If you have any comments, drop it below, and remember to subscribe so that you can get more notification. All right, see you next week. Bye.